benefit, from this. So
Okay.
whenever I've got time, I just come in. They are so beneficial.
Okay. 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 That's good. Yeah, that's good. I'm always happy, when I get positive feedback. And hey, tonight's session is on Friday. First, I think it's been a while since we had a session on a Friday afternoon. And it just shows that we have some amazing people that are really passionate about trading. And also not just trading, because the main goal obviously is financial freedom, is to have option. I think as we saw, as much as wanna have option, now having like multiple streams of income, it's no longer a luxury, it's a need. It's actually a need. We cannot live on one single income, based on what is happening in our country and also based on what's happening in terms of inflation numbers. And as we saw the Minister of Finance presenting the budget speech, I was so shocked. But otherwise, we move on because we have to find means or ways to survive. Okay. With that being said, let's get on to tonight's session. It's the 14th of March, as 23 past 7 in South African times. So my name is I am Mr. President Wonga. For those that are attending or that are watching maybe perhaps you'll be watching this the recording of the session. So the main focus is about trends, movements, the basics. So this is the first step when you're doing your chart analysis. Okay, this is the first step, especially when you're doing your chart analysis. So it's about understanding what is going on in the trend. So trend movements, firstly, we said in every time frame, you should be aware of the major trend, be aware of the minor trend. Remember that the major and the minor are divided into three parts. You've got the downtrend where the market is actually dropping, and you've got the uptrend where the market is actually going up in the rally. So when the market is going up, it's in the rally, it's called the uptrend. Then you've got the sideways, which is the base. The base, we did speak about it last week. The base is where a lot of things are happening. There's a couple of meetings. So basically, in the base, if you're looking at in the example of an army, a base is where you see the army or soldiers having camps, having their chants, having meetings, having planning. Before they move and conquer a territory, they need to meet in the base. So same story with the price. You see the price consolidating in the base, moving in the range within the base. A base happens before a rally. A base happens before a drop. Okay. So it's very important that you get to understand when you are looking at the charts, any point, if you are looking at the charts, it should be, it's either the chart is moving in the range or in the base or sideways, or that chart is actually dropping, or that chart is actually in the rally. Okay, let's go over to the charts because it's very important that we have understanding. All of us understanding is what we want. Understanding is what we want. We want to make sure we've got traders that have a bit more understanding in terms of what is going on. All right. Okay. We said we talk about the market is either in the uptrend or is either, for example, let's go look at gold. I think the last time we had a session, gold was nowhere near this level. I think gold was somewhere here. So gold was somewhere here. Gold was at 2,925. Okay. All right. So gold was here. Okay. And that was before we got what is called inflation numbers. Remember this week you've got inflation numbers, CPI, we had PPI, which is your producer, index. consumer index, producer index. Okay, so look at gold. Okay, I'm just gonna mark a zone. So this is 4 hour charts, meaning every candlestick that is on this chart is 4 hours. It doesn't matter the size, but every candlestick is built up within 4 hours. Okay. So let's look at gold. We said the market is either, so this is where the market was moving in the downtrend, because we are talking about financial markets trend. The market was in a downtrend, okay? Now, if you look after the movement has been completed, this year was our base, or the market was moving in the range. When we say in the range, is when the market is actually moving, not obviously. If you look at this in the smaller time frame, you will assume that the market is actually moving up or moving down. But if you look at the bigger time frame, you can see this is a base. The market is actually moving up and down. And the way you trade when the market is moving in the range, you place some trade. Okay, let me just show you what I mean, because when the market is moving in the bay, in the sideways or in the range, when you say in the range, if you did maths, a range is almost like saying, for example, the price is here. This is 2898. Okay, this is the line, the red line. You can see the price on this side, 2898, and the price on the upside, which is the upside. This is the upside. It's almost like saying the price of the ceiling is 2928 and the price on the floor is 2898. Okay. So that's $70 is the difference. Okay. I see. Okay. So when the price is moving in the range, the way you trade when the market is moving in the range, okay, you normally when the market is here, you buy. When the market touches level, you sell. When the market touches here, you buy. When the market touches here, you sell. When the market touches here, that's now breaking below this zone and coming back here. Okay, and now the market at this time, it start breaking above. You can see breaking above the range. So this here is what we call the range, where the market is moving sideways. So as a trader, if you're gonna be doing some analysis, understand when you are looking at the chart, what is the chart doing? Is it moving in the range or is it moving in the downtrend? And if you are looking in the range, you can zoom in, quickly zoom in. So if you zoom in, obviously the way you zoom in here, you go in a smaller time frame. Okay, if you go in a smaller time frame, you'll see what is going on. Perhaps you can trade even the range. If you go in a little more smaller time frame, you can see you can surely trade this range. If you go on a daily, it's a very small range. Can you see the yellow rectangle? It's a very smaller range. Okay, let's just zoom out. Okay, currently, because the market is going to be closing very soon. Okay, so please tell me what is going on. Is this market moving? Is the movement that you see on gold right now, is it moving in the range? Is it moving in the form of a drop? Or is it in the rally? Three options: rally, drop, or range. Or we should call it sideways. Okay. I just need your answer in the chat box, before we go on in terms of the session. All right. Is it moving in the drop, bearish movement, or is it in the rally? You know, bullish movement going upwards? Is it in the range moving sideways? Because that's what happens. Every time you are looking at the chart, it's going to be doing one of those three things: moving in the range, dropping, going up, you know. Okay, we've got an answer. We've got a response. Upward. Okay. Okay. Can we get a bit more response? Upwards. Okay. Okay, okay, okay. All right. So just to have a clear picture on this one, the way we're gonna do it, remember the higher time frame, you get your direction. Smaller time frame, you get your entry. It's where you put your stop loss, you know. Higher time frame is where you put your check profits, you know. Okay, let's just do that. Okay, so we've marked this. We've marked that level as our range where the market actually above, broke above this range, you know. And then what is currently happening, if you go and zooming in is basically we're looking at the smaller time frame. Okay. You can zoom in by pressing, these buttons, the plus and the minus on the charts. But what is happening now, the market broke above this level. Let's just zoom close to, because this is the key to every trader improving their chart analysis. Okay. So I want you to notice something. You will notice that the market touched these levels while it was moving in the range. So this was the range. The range was the market was touching this level, dropping, touching this level, dropping, touching level, dropping. Suddenly there was a huge drop. This was making traders fall trap of in the wrong direction. But then stop hunt, and then the market started moving in this direction. And you can see a lot of traders were stop out that had their sell position or their stop losses around this area here. Okay. Now there was this movement here. So we're saying the market, obviously, the gold market has been bullish. Gold moved up and it broke above even these highs. Okay. Now you can see here what is happening right now. It was is called the market is consolidation, or just pulling back before the close, Friday close. Okay. So you can see that the market is not actually, you can see it's touched the $3,000 mark. Okay. $3,000 mark. Okay. So now what you normally will expect is that after the bullish movement, the bankers will want to take some profit. So from this low to this high, we draw our Fibonacci. And that Fibonacci means at that level, for now, you might just see that drop. Okay. So the gold has been moving on the rally. So the rally, this is the rally from here, from this level, and towards the $3,000 mark. So I'm expecting gold to do this and make a drop. That drop towards that base, you can see, towards that base. That is the base that I'm looking at, and then another movement to the upside. Okay. Because it created a new high, so it needs to pull back. Chances are it will go back to the level of 2,950 US dollars and then make a drop. But currently, it is moving in the form of a range. Okay, it's moving in the range. After a bullish movement, now forming a base. Okay, let's just go on. Let me delete this so we can have a bit of clarity. Okay, so you can see now the momentum is no longer that aggressive bullish movement. Okay, let me also delete this. Yeah, delete also this. Okay, can you see? So now the market is no longer moving in the aggressive, which was this point here, aggressive bullish movement. And now the market is slowly slowing down. So this means the bankers or the market makers are taking profits. So the traders who actually made this buy are now taking profits. And now you can see the base. Chances are it will go back a bit before, and you can see even here, this is 1 hour. And if you check here, this is a very nice chart pattern. Okay, very nice head and shoulder pattern. Okay, it's a very nice head and shoulder pattern. Okay, let me just move this here. So it's a very nice head and shoulder pattern. So these are the shoulders, and this is the head. Okay, yeah. Head and shoulders. Head and shoulders pattern. Okay. Yeah, on 1 hour. So expecting the market for it. The reason it has to reverse to the original. So this is a movement that was a bullish breakout from that zone. I'm expecting to come back here, then made a further move to the upside. So, like I said, when you're looking at the charts, it's either the market or the price you're looking at is either is moving in the uptrend or it's either moving in the downtrend, or it's either they've run enough, they have to come back. Yes, 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 yes. True. Yeah. Yeah, they've made those rallies, so now they have to come back. So this market has been on a bullish movement, the upward movement, which was here. And after the movement, it got to the high. And the new high was the 3,000 US dollar mark. So this was right. It was a bullish movement. But now here it is doing what we call now in the base or in the range or moving sideways. Why I'm saying sideways? If you look at this movement, the price was moving up, straight up, 90-degree angle. Suddenly, when it got to this point, it started moving slowly to the sideways, and then it's going to drop and then move to the upside. Okay, let's go on with the notes and maybe let's do another example. Okay, let's do another example. If you've been trading any pair, please share with me. So maybe we can use that as an example. Okay, so that we're able. So judging by looking at this pair, what is the trend in terms of the movement, in terms of our lesson? Is this market or US30 moving? Is it a downtrend or is it an uptrend? The major trend right now, looking at this time frame. Looking at this time frame. Downtrend, uptrend. Okay. So by judging by virtue of what has been happening, it's been on the downtrend. Okay. Been on a downtrend. Downtrend. Perfect. It's been in a downtrend. Okay. So a downtrend is where you see, for example, the market dropping. This is a low, and it's coming back again, forming that level. So let's just mark that high. You can see, and then the market made another drop again, and then come back. You can see it's forming lower lows. So lower lows, just creating new lows, dropping another low again, So this has been on a downtrend. Like we've said before, in the downtrend, the best trades that you're gonna make are gonna be where you are selling. So if the market is going down, it's in a downtrend, the best trade you can take are those one where you are actually selling. Okay. So for example, the major trend here is a downtrend. Okay. But within the major trend, you can see there is some little bit of trends where the market is actually moving up here. Okay. And then make another drop. And then again, in between here, you'll see that there are ranges or bases that are formed. Okay. After the certain base, the market will drop. After certain base, the market will go up. Okay. Let's just go through the note and then judging by what is happening even here. Let's just remove everything once again, because the more example we do, the more understanding you will have in terms of what is going on. Okay. Okay, so let's do this. So we mark the high, that level, and then we mark this low, okay? And then we mark this high once again. And you can see whenever a market is coming back, for example, here, this was our almost like, you can see this level, the market's touch, and then another drop, another drop, you know. Now the market is coming back again towards this high once again, and possible when you touch again this level, possible another drop. Because also there's been a lot of talks around possible of recession, around the the indices in the United States. Okay, and you can see even here, the market, what happened, made a drop, from this base. So there was a huge drop here, and you can see here, there was this base that was formed. Remember, drop, base, drop. Okay, so the market actually came back and touched this level and make a drop towards this level. Okay. All right, let's just continue with the nodes because the nodes are critical for your understanding. Examples is where you actually gonna make sure this thing is okay. Okay, let's do. So the major and the minor trend we've discussed is divided into three parts. Okay, so whenever you are looking at the charts, you will get to understand where is what is the current trend that the market is actually on. So you've got a major trend here. So the major trend is where you've got the downtrend, and this is where the market is in an uptrend. I think the downtrend is what the US state is currently doing. The uptrend is what currently is the gold is doing. Okay. So remember, whenever there is a recession, you find that indices are struggling, but gold, because it's where people put in their money. I think even Bitcoin, can you imagine? Even Bitcoin is now one of the saved assets where people put their money when there's recession. If you look at Bitcoin currently, it's actually moving to the upside. I think at these share charts where we saw that potentially Bitcoin is actually going to be moving up. So this is a major trend looking at the bigger picture, and this is a screenshot of a daily time frame chart. Major trend, the market is moving up. And also the major trend is when the market is moving sideways. Okay, and you can see in between the major trend, let me just wait on this slide. So in each major trend, there will be smaller trends. Okay, these tiny trends actually happens either to form a retracement or as a warning that the market will change a direction. So a direction meaning it's either the market has been moving up. You can see that the pink or the blue is where the market is moving up, and then you've got the base here, which is a uh, green circle, you know, then got a blue where the market is moving up, and then a pullback on the pink, and again on the base. So whenever you see a change of direction, you will see a base. So a base moving up, and then again another base. So it's where we call it a sideways. So while there is a major trend, there's also going to be a minor trend within that major trend. So the what you can do, you can change as a trader. You can swing trade, holding a trade by looking at the major trend, meaning you are holding a buy in gold because you're saying gold is definitely gonna move up. So you're holding a buy there. But day-to-day basis, you are also you are also placing maybe a sell in the morning and then a buy in the afternoon, maybe a sell in the afternoon and a buy, because that is what called day-to-day trading, or it's what we call position trading, or it's what we call scalping. It's where you are opening a buy, then when the market is forming a base, you close a buy, and then you open a sell because the market is pulling back. Because you are if you are trading the minor trend, that's what you should be doing. But if you are trading the major trend, the bigger picture trend is where you're thinking like an investor, where you can swing trade. because you're looking at the direction that the market is actually going to be moving up. So you hold a buy for a longer period of time. But if you are day-to-day trading, if you are scalping, if you are intraday trading, that is where you should be trading, focusing on the minor trends and also have a bit more understanding what is the market doing. Is the market moving on a downtrend? Okay, after a downtrend, I expect the market to form a base, moving sideways, where it's collecting orders. Then after that, maybe is it gonna continue going up or is it gonna change direction? Okay, and then place an opposite trade based on what the market is doing. All right. So that is why it's very important for traders to understand this. Okay. And then and another thing that is important is this is being able to determine the high and the low of a trend. So what we do is we can only identify by looking at the highest candlestick shadow and the lowest shadow also. We can only take the high and the low when we see a significant decrease or increase. If you're still confused, obviously, what you can do, you can also shrink the charts. Okay, shrinking the chart is where you're pressing that minus or the plus zoom button option or a function on your charts. Okay, so high and minor trend can be measured by looking at the short-term trend or within the range of a small movement. Okay, so this is what we mean by this. So you've got the high of the major trend. Basically, you're marking the highest, you know, you can see here. Wait, wait, wait. Okay. So you mark that high in terms of the chart, and then you mark that low in terms of the chart. Okay. And then you've got the high here, and then you've got the low here. That is on the major trend. Okay. And then also, if you look at the major trend, once again here, you can see these are minor trend. Okay, so these are the trends that are forming within the major trend. Okay, so and I'm going to show you even in the charts. We're going to use another example. Okay, so that is on our next session. Okay, let's do some example so we can all be in the same page. We're going to use another example. We're not going to use the same charts. And you can see that what we're doing actually, as much as we are running a session, as much as we are also running a session, we are also welcome. Ms. Rebecca is joining us. Okay. Yeah. Okay. Like we've said, all right. Okay, perfect. Okay, let's go to the higher time frame. Okay, so when we say we're marking the high and the low, what are we referring to? We mark this level here as our high of the major trend, and we mark this level here as our low. Okay, so now if we are looking at this this one here, you can see oh, oh. Okay, let me just try and mute. Okay. All right. Okay, you can see this market here has been, the major trend has been on the downtrend. Okay, so if we take the Fibonacci from there to the bottom, okay, we can see that now this market, as much as it's moving in a downtrend, there was some recovery. So this side here, so after a formation of that base, this base here, after a formation of that base, we saw that the market actually started moving towards the outside. From here, it started moving towards the upside. So it's been on the, so GDP USD has been on the rally, but now we can see it is now here at 61.8 in terms of the Fibonacci. So this means this market has rallied up until towards this point. Okay. So what I want to do is I want to I'm gonna change this into a line chart. So just for you to see the pattern that is being formed. A pattern, a chart pattern. Okay. Remember, if you've remember candlesticks, they what they do. Okay, let me just change this to a line chart. Okay. So changing this into a line chart, we go here. Okay. Okay. So what I'm gonna do, I'm gonna mark some level. So we mark this level here. Okay, and then we mark that. So remember, we said we are marking the high and the low. So this is our high, and we're gonna mark another high. So this is our high once again, and this is one of the lows. Okay. So what normally would happen is when the chart, so what normally would happen is this here is basically our floor. So this is our ceiling. So the market broke below our here, broke below our floor. So we expect the chart based on the chart patterns, on the behavior of the chart. I will expect it somewhere here. Okay, so somewhere here, the chart to make a drop here. Okay, remember, this is number one to show you. So this is a drop. Okay, a drop is what we call the downtrend, and then you've got a base here. So, and then you've got another drop. Okay, so this is a drop. Okay, and then the base. Oh.